Good morning and welcome back to Morning Markets from True Potential, Paul Durran's Investment Director. If we start by looking at how global equities performed yesterday, we saw mixed returns depending on which region you look at. Here in the UK, the FTSE 100 was down marginally. That was despite a rally from oil and gas companies, which benefited from the oil price pushing higher again, up to $120 a barrel, which is near a 14-year high. We continue to see elevated oil prices and a recent surge given a pickup in demand expected to come from China, given that they've eased their lockdown measures in terms of COVID, and we continue to see tight supplies. European stocks were weaker and underperformed the UK, given technology and autos dragged down the index. What we did see from US equities was a real positive day yesterday, despite weakness earlier in the day. That weakness came from weakness from US retail companies. We saw companies such as Target, which is a US department store company. They revised down their earnings expectations for the second time in 3 weeks. Given the mismanagement from companies, we've seen weakness from other US retailers such as Walmart. What these companies have been doing is building up their stock levels, known as inventory, over recent months because of fears that they're not going to have enough supply to provide to consumers, given the supply chain bottlenecks that have existed over the last 12 to 18 months. Given that they've got so much stock in their warehouses, what they're now having to do to get rid of that stock is really slash prices. Consumers are changing their spending habits. They're switching from goods to services, such as buying holidays after buying a lot of goods during lockdowns. So the US retailers are now having to cut down prices, which is bad for their future earnings expectations, but good for consumers that are faced with high energy prices and just a squeeze on their living standards. In terms of economic data, a very quiet day yesterday, but we did have data from the UK with survey data from services. Really important because services contribute about 80% of UK economic growth. At the headline level, the reading came way ahead of what was expected, so it looked very good. But when we dig into the details, what we saw is a very different picture. When we look at new orders growth and business expansion, that came markedly lower as consumers have changed their spending habits, reining back on spending given their high level of inflation today. What was pleasing to see was that jobs growth continues to be robust, and that should continue to underpin UK economic growth going forward. In terms of prices, inflation, that continues to push higher, reaching a survey record level given the surge in prices of energy, raw materials, and actually the cost of labour itself. Higher prices will put more pressure on the government and the Bank of England to do more to help support households and companies. That's everything from us today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.